This is the Coronation Podcast.
What if you could build an investment portfolio that is designed to handle market ups and downs without you having to constantly worry? Welcome to Coronation Conversations, the podcast where we make smart investing simple. I'm your host, Blessing Ishola, a research analyst here at Coronation Asset Management. Today, we are cracking the code on one of the most powerful but often misunderstood concepts in investing, diversification. It's more than just putting all your eggs in one basket. It's about building a resilient financial future. And to help us do that, I'm thrilled to be joined by Oladele Johnson, an investment manager at Coronation Asset Management with years of experience building balanced portfolios for clients. Oladele, welcome.
Hi, Blessing. Thank you. It's a pleasure to be here, and you can please call me Dele.
Let's start with this. When people hear the word diversification, what's the first thing that usually comes to mind, and what do you think they are often getting wrong?
Okay, so the concept of don't put all your eggs in one basket and just stopping there, I think that's what most people hear. But the deeper point, I believe, is resilience. So imagine that you rely on one source of income. If that source dries up, then you are vulnerable. And that's how investments work, right? If you put all your money on one portfolio, right, you keep everything in one position, then you are exposed to massive risk. So in the event that there is, some fluctuation in that investment, you are left without a safety net.
So diversification is not just about avoiding risk altogether, but making sure that no single event can derail your financial goals and plans.
Yes, exactly. So you are trading the slim chance of a big win on one bet for, let's say, the much stronger probability of a steady, reliable growth experience over time.
Okay, so let's break this down. If I'm an everyday investor, what does diversification actually look like in practice?
Okay, I would say this. I would say that diversification works on three different levels, right? Number one, I would say it works across asset classes. So equities, for example, gives you growth over a long term. Fixed income type investments provide stability, and money market investments or instruments ensure that there's liquidity for you available when you need. I'd also say that across currencies, right? We are here in Nigeria and our currency is Naira. We spend Naira. So adding some form of foreign currency exposure like the US dollar, the British pounds, it helps to build resilience in the event that there are some fluctuations in currency performance. And I would like to say that across time zones, time horizons, right? So we have short-term instruments, we have mid-term instruments, and we have long-term instruments, each of them having what they do. Long-term instruments help for wealth creation. Short-term instruments help for quick access to funds whenever you need them.
That's a powerful picture, Dele. Thank you so much for that. But for some listeners, they may be thinking, do I really need to buy all these different investments one by one to put them into a basket? It seems kind of cumbersome. Can you break that down?
So that's the beauty of it, right? You don't have to. A well-structured fund does the heavy lifting for you. For example, the Coronation Balance Fund, it is built on these same very principles. It combines, equities, fixed income, money market instruments into one portfolio. And the good thing is that it's managed by professionals. So you really do not, you really get growth, you get growth stability without having to juggle the details yourself.
Okay, thank you, Oladele, for that explanation. It's good to know that an investor doesn't have to buy those investments one by one, and there is a fund that actually takes care of that for them. So talking about the Coronation Balance Fund, can you briefly explain what the Balance Fund is, who are the target investors, and how the fund works?
Oh yeah, sure I can. So I'll say that the Coronation Balance Fund is an open-ended mutual fund right, that invests in a mix of equities, fixed income securities, and money market instruments. I would say that this is designed to generate real returns and long-term capital growth for investors. Now, this is done by allocating funds across diverse asset classes. For the type of investors, I would say that the fund is ideal for investors who have medium to long-term view for their investments. And by medium to long term, we mean 6 months to 5 years, right? And it's very important for me to emphasize that these investors must be comfortable with some level of market fluctuations, right, in pursuit of higher returns. This is very important so that the investors and subscribers can, enjoy the returns on their investments. So generally speaking, for all mutual funds, right, multiple investors pool funds together. Now, this is me speaking to how the mutual funds work, right? Multiple investors pool funds together, just like we have the AJO and other contribution schemes, right? So they pool funds together, and these funds are then managed by a team of experienced professionals who allocate, the funds to different investments. So for the balanced fund, this cuts across, like I did mention earlier, quoted equities, money market instruments, and fixed income securities. It is very important that I mention here that investment decisions are guided by strong research management, risk management frameworks, and sound portfolio allocation strategies.
Thank you very much, Dele. I like the example you gave of the AJO. I think that's very relatable, and it gives comfort that there is a structure that's more organized and is backed by strong research and risk management frameworks. So what is the minimum investment amount and total returns or returns on the fund guaranteed?
Okay, the minimum initial investment is 10,000 naira. So with as little as 10,000 naira, you can make yourself a subscriber to the fund. And then additional investments are allowed in multiples of 5,000. So it means you can make a 10,000 and then 5,000, 5,000 or 10,000, 20,000. As long as they're in multiples of 5,000, you're good, right? The returns on, now if you remember, I did mention that investors must be to accept some fluctuations in the market, right? So the returns on the balanced fund are market driven, and they pretty much reflect the performance of the underlying assets, right? However, as fund managers, we actively seek to maximize as best as possible the gains for the fund while managing the risks through a diverse portfolio strategy.
That's very interesting. Thank you so much, Dele, for that. So how can I or any investor who is interested in investing in Coronation Balance Fund go about it? How can I invest in the Coronation Balance Fund?
Thank you, Blessing. That's a very good question. You can invest via the Coronation World app. For those who make use of Apple devices, they can use the Apple Store to download this app. And for those who use Android devices, they can download through the Google Play Store. For Access Bank clients, they can subscribe and redeem funds through the Access More app. We also have an online portal that can be used for subscription and redemptions to be completed digitally. And of course, finally, our direct sales agents can also assist clients with subscribing to the fund.
Thank you, Dele, for that. Is the Coronation Balance Fund listed on the Nigerian Exchange Group? That's the NGX.
Oh, no. The fund is not listed on the NGX, the Nigerian Exchange Group. However, the fund is highly regulated and supervised by the Securities and Exchange Commission, Nigeria.
That's very good. Thank you very much for that in-depth explanation of what the Coronation Balance Fund is and how investors can get into the fund to maximize their returns. So we'll go back to the topic of the day, diversification, and I would like us to make it a little bit real this time around. Can you paint a picture of how diversification actually plays out for investors?
Okay, yes, sure, I can. Let's say, imagine two investors, right? Give me another, right? Each starting with the same amount of investment, say 10 years ago. So Baby puts all her money into one single stock. because she believes that, this stock is a sure thing. I'm going to make my money. I'm going to make a lot of returns. While Ada chooses a diversified portfolio, right? Similar to what we have in the balance fund. Now, what happens is when the market dips, Gwemi's portfolio pretty much plunges, right? And he could possibly lose 30 to 40%. He might even panic, and tell everything out the loss. However, Ada, on the other hand, also felt some form of downturn. But because he has some elements of fixed income, money market instruments that help to provide buffer in times like this, right? He possibly will just have maybe 10 to 15% downtime, right? Or downturn. And, she'll stay calm, you'll stay invested, and her chances of recovery are much faster than, Gwemi's. And on the long run, right, you find that the strategy of Ada, right, helps to outperform, Gwemi's roller coaster ride, as it were, right? Pretty much just helps show you how diversification, can help your investment bucket.
That's very interesting, Daily. Thank you so much for that. In summary, what you're saying is that diversification is much more about managing emotions as it is about managing money.
Oh yes, precisely. It gives you what I would term peace of mind and the confidence to stay the course of your investment journey.
Thank you so much for that. And to our listeners, investing in the Coronation Balance Fund is quite straightforward. Just like Oladele has previously mentioned, you can invest through the Coronation Wealth app, Coronation Investment Portal, or if you are an Access Bank customer, directly on the Access More app, you can access the Coronation Balance Fund there and easily invest.
Yes, exactly. We've made it easy and accessible so that all types of investors, right, all levels of investors, all layers of investors can focus on their goals, right, while we manage the complexities of the market.
Thank you so much, Daily, for that. So before we wrap up, what are your 3 golden rules for diversification?
Okay, pretty much my 3 golden rules for diversification. Number 1, I would say, do not put your eggs in one basket, right? Spread your risk, spread your eggs as best as possible into different baskets that are not related to themselves, right? So that, you are able to hedge against fluctuations in the market, fluctuations in currencies, and the likes. Number 2, I would say Rome was not built in a day, right? So be patient. Diversification, it shines over a long period of time. And number 3, I would say don't go into it alone, right? Regardless of whatever you do, I'll always advise that you make use of professional tools and advice to guide your investment journey.
Excellent advice. And for our listeners, the simplest way to act on that 3rd rule is through the Coronation Balance Fund. The easiest first step is to visit our website at coronationgroup.ng. There you'll find the fund fact sheet, performance updates, and direct links to download the Coronation Wealth app or start investing right away. Okay, thank you so much, Daily, for making diversification simple and practical today.
Yes, thank you so much, Blessing. It's been a pleasure to be here.
And to our listeners, remember this: diversification is the cornerstone of resilient investing. Take that first step today with the Coronation Balance Fund, and don't forget to share this episode and subscribe to Coronation Conversations. Stay informed and invest wisely. Thank you.
This has been the Coronation Podcast. Thank you for listening.